Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. The good, the bad, and the ugly, it all comes a part of what we see in these cattle markets. Unfortunately, got a lot of ugly going on right now, but we're going to dive into what's happened in this trade. Not a pretty picture to start out the week, and as Brad and I are recording this, there is some green on the screen, so hopefully that momentum will keep up. But really, it's been a tough week already for this cattle market. We're going to talk about expectations for the trade, and believe it or not, we're still seeing the ghost of the cattle on feed report showing up to what we see in the numbers. So let's dive in. As you see, Brad Kooima is joining us. Of course, Brad is with Kooima Kooima Varilek in Sioux Center, Iowa. And kind of want to start out, let's talk about the fact, a struggle bus, frustration with this cattle market, coming off on the wrong foot. There's so many factors that we didn't expect to see last Friday in the trade that we saw Monday, Tuesday.
No, yeah, certainly, Susan. Thanks for having me on. Of course, the market. The older I get, there are plenty of days where, for me to sit here and give you a good analytical explanation of, okay, this is why this happened, is very difficult. And to step back just a little bit here, I think it's appropriate maybe to mention that since the beginning of the week, the way this market's been. So let's back up here till Friday. A week ago, expectations by me and most all the traders thought that we would be higher on cash cattle last week. We had a great performance the week before that. That's the week that we absorbed that bearish cattle on feed report. We had the $6 plus lower day, and then cash market, we sold enough resolve in part of the feedlot that cash firmed up and the futures firmed up with it. Friday, we rallied the market right into an area of resistance. For instance, Fib cattle rallied right to where that gap was that we had left with that cattle on feed report, got right there, failed, closed lower, and you thought, that's a little disappointing. And then the cash trade later on Friday afternoon. And when you have a late week trade, usually cash is higher. It wasn't last week. Barely steady. Some places $1 lower. And I think that disappointment, because Susan, it's what happens compared to expectations. So compared to this week's expectations now with this bloodbath that we've had with the futures, where everyone is assuming cash will be sharply lower this week. So anything other than that would actually probably be supportive, to the market. But we broke $10 this week on the front months. Hopefully, while we're visiting here, we're nicely higher. We're $3 off the lows. It's looking like maybe we've, arrested this sharp break. But, I got about 50 sticky notes here that I've accumulated over the years. But one of them says up on the stairs and down on the elevator. In other words, markets that rally seem to have a tendency to rally kind of gradually. And when it's over, it goes down very, very quickly. So, we can spend a few minutes talking about what I think is the fundamental story, or we can talk about what I think is maybe the technical influence here. Whatever you would care to talk about here, Susan.
Well, let's start with the fundamentals. What are you seeing? What's not adding up when you look at this?
Great question. And there are parts of the fundamentals that absolutely do not add up here, Susan. I'll start with the choice select spread. It's November. This is typically when we have all kinds of choice cattle because the north has got long-fed calves. Typically, the spread would narrow this time of year, right? It's not exactly a special demand time of year here either, approaching Thanksgiving, etc. Instead, it's $31 over. So anyone that sits and tells me that we've slowed the turnover rate to the point where we've got cattle backed up, that we'd have a lot of choice cattle, I just don't see the evidence of that. Average weights are the same as a year ago. Year-to-date slaughter, year-to-date slaughter is down 4.7%. So excuse me, I think that still tells me, and as well as the anecdotal evidence that I see in my area, which is the north, that we are as current as we've been since 2014. We like the price. We like the fact that these cattle work good. We're selling them. To me, we're way past what normal is as far as how many calves we've got sold. This is somewhat anecdotal too, but I know this for a fact because they're my cattle that are getting sold up here and getting exported a long ways south. Okay. And why would they do that? And if they had such an oversupply of cattle, or is it that, or are they chasing grade? Either way, because cattle up here that are fed a long time, our cattle are going to grade 95% choice and prime, right? Texas average is 63. So I don't see that as being something that happens in a real bear market either. So to me, some of the guts of the fundamentals still seem to support the idea that we're in better shape. But we're at a high price, and the futures market can be wild. I mean, we're $19 off the highs. We broke $10 this week. Um, and so you got a lot of traders, unfortunately, that don't know the difference between a steer and a heifer. So, I don't know that we're going to teach them anything either. It's a computer anymore, right?
Yeah. From a technical perspective, what do we need to be watching this week?
Well, let's hope this is it, because, I can come up with a couple of reasons why this could be it today. Elliott wave theory, that's the theory that markets make three major moves before they complete it. So 3 legs down in the case of this deal, which we've had, especially in the February cattle, where I guess I'm kind of doing our chart work. We got a little sloppy today. We got even a little bit farther than maybe what exactly that leg measurement, but it's never that easy. It's never that perfect. So we kind of got to some of those objectives that you would have used with that theory of 3 legs down. The other thing, we often measure off of these gaps, that big gap that we left 2 weeks ago off of that bearish cattle on feed report, we all remember, that projects to within about 40 cents of what we ended up having for the low of the day today too in the Fib cattle. So I think we've met some of these chart objectives now. Maybe we can stop the selling, slow the selling, and see if we can't get somebody to recruit it here back to the long side. We are trading a very, very steep discount to whatever the last cash was. We don't know what cash is going to be this week yet, of course, but I don't really think anybody thinks cash is going to be down where futures are here. At least I sure don't.
So why is the ghost of cattle on feed past? I mean, we're 2 weeks past this, still haunting the trade today.
Maybe it's just me, Susan, but it bothers me. And as a fundamentalist, I got to think that every other fundamentalist has to be a little worried. We're going, so I just quoted 4.7% less on feed. And then the last report said we actually have 1% more on feed now compared to a year ago. So, you're going like, really, I don't know. And then as you look forward here to 10 days from now, when we've got the next report, you get some of these pre-estimates, pre-guesses from some of these so-called analysts. And there are some that think we're 2 and 3% higher than a year ago on feed because we had a big placement number in October. Didn't feel like that here in the north. But if they put together, say, a placement number that's 5, 6, 7% more, all of a sudden you're looking at what kind of a whole different dynamic, where I had felt very confident that moving into the first quarter, late fourth quarter, early first quarter of next year, that we were going to see tighter and tighter supplies. Now it appears like we're going to feed every stinking heifer again, and that maybe we'll have a few more cattle around than I thought. Now, that doesn't mean we're at 150,
Right.
but that maybe does take some of the bloom off of the, are we going to go to 200? Maybe, I guess I'm in my own mind, I'm starting to, I need to see more data, but I'm starting to back off a little bit, or postpone, maybe is a better word, when we're finished off this move, because if we indeed don't retain heifers, and if we feed them all, we're borrowing Peter to pay Paul here. At some point, we've got to save some heifers, so we've pushed that big supply tightness here down the road. Perhaps that's what I'm looking at and evaluating.
So you talk about that, and that kind of leads into the question that I received from a Nebraska LEAD attendee. Was saying, why are we not? I mean, I know it's the dollars that are happening with these heifers, but we got to look at the long-term picture. Why aren't we keeping some heifers so we can retain these herds 2-3 years down the road?
I like this person, whoever it is. It's because it's a great question. It's an astute question. Probably going to get a C+ answer to it. But it's a great question. It's a great thing to think about, I think. I guess I'm going to start with the fact that, first of all, every operation is a bit different, of course, and financial constraints are still real. Think about, though, we've already got a cow herd that's the smallest in 60 years. So for most people, we've already sold off every cow that wasn't productive, plus some, right? I mean, everything with some age on it, anything, and the cow market very, very high, so you're highly incentivized to take this opportunity to clean up that cow herd. But even beyond that, because of drought, etc., guys are selling cows that they don't want to sell in the worst way, but have no choice. So, so why haven't you held that heifer? I guess I still got to think about that you first of all, you got a super small cow herd, so why not? When I ask that question to people across the North, cow-calf people that I've gotten to know, largely the answer is economics. They tell me I can't afford to turn down $1,800 or $2,000 for a yearling heifer.
Mhm.
I know I should be thinking about it, but the bank says I got to do this, or I got to, I got to make some money, maybe next year. And there's some areas too where, yeah, it rained this year, but one robin doesn't make it spring. Guys are telling me, I usually I've got a year's worth of hay here sitting around, and I don't. It worked this year, it rained this year, but they're still not really super confident that it's safe to just run out there and figure it's going to rain again like it has. I mean, some of these guys have had back to back dry years in some places. So, but this guy's thinking the right lines here. I am curious to see when we get into the calf run of the North whether we're going to see a little bit of a change. A lot of yearling heifers came to town, and a lot of them went on feed. That last report, like I think I told you a couple of weeks ago, that was a record number of heifers on feed as of October 1. So we'll see once if we get into the calf run, if we slow that heifer thing down a little bit. That'll be our first indication. But if I was him and I could expand it, that's what I'd be thinking about doing. But there's my C- answer, and you're getting whatever they advise is what you paid for it, which is nothing, right? So I'm guessing like the rest of you.
All right. Great conversation today. Best way for folks to get a hold of you guys?
800-358-3047, or check us out at kkvtrading.com.
All right. As we always remind you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.